Okay, so this is a topic on portfolio optimization. This is a fundamental topic in finance. You know that financial principles dictate that it's not, the layman's term is that it's not good to put your eggs in one basket. So you don't put your investment just in one stock, okay, or just in two stocks, because you know that that's very risky. If the performance of that stock plummets or goes down, then you put your investment at risk. So according to Markovits, the best thing to do is to generate a portfolio where you allocate your assets, in particular your cash, into several assets, because the objective is, what's the objective, class? What's the purpose of diversification? What are you trying to diversify away? What are you trying to minimize, class? Anyone?
Sir, systematic risk.
Yes, thank you. Who was that? Sino yan? Sino yung salita?
France po.
Franz. Okay, thank you, Franz. Yeah, you're correct. The objective is to minimize or to diversify away the systematic risk. We know that we cannot diversify away the unsystematic risk. It's only the systematic risk. So if the if the investment of a portfolio is subjected to unsystematic risk, that's a given, and you cannot be faulted for that. But if you did not diversify and the asset becomes false because it was subjected to systematic risk, then that's the fault of the one holding the asset. So I will not anymore discuss that. I think you have so many subjects that dealt with the systematic risk, and there are many researchers that say that if you diversify, okay, and the question is how many assets should you put in your portfolio? Other studies indicate 15 assets, other studies indicate 30 assets, other studies indicate 40 assets. So there are many different studies that indicate the different number of stocks in your portfolio. Of course, from a if you're not an institutional investor, if you're a personal investor, holding 40 assets in your portfolio can be really cumbersome. So that's why you will be needing the help of practitioners in this regard. Okay, so last time what we did was, yeah, okay, thank you, Josh, and thank you, Richmond. Yeah, so this topic calls for learning how to make use of R to generate a portfolio, which will be your next case. No? Your next case is to develop a portfolio where you're going to determine what is the weight. You're given a set of assets. What is the weight of the assets that where you're maximizing your returns or minimizing your risk? Okay, so let's a quick review only. Okay, so we said that R has so many functionalities where you can compute for the returns. Okay, so let me just start with, for example, this one. One of the most popular package in R is in terms of in terms of studying stocks is performance analytics. Okay, so let me see. We have created this object prices. Okay, so just a quick review. What are prices? So prices contain, okay, sana siya? Okay, let me just, what are prices? Here, prices, it's an XCS object. Let me run this. Oops, sorry. Prices. Okay, it consists of the stocks that we generated before, that we imported before through quant mode. Apple, Google, Microsoft, Intel, Amazon, Netflix, and we saw that Meta and Facebook and Tesla had missing values in them because we started with 2007. At that time, Meta and Tesla had no recorded stock prices. That's why we had to adjust this. So what did we do with this? Okay, so let me go to the adjusted already. Okay. Okay, here. All right. I hope you still have this class. By the way, we also installed the QMAO package, a very important package, especially in generating data frames of returns of assets. Okay, so that this function make price frame, make return frame. This is very convenient. The PF function or the make price frame and RF function or the make return frame, very convenient to use. So we're creating this object. We are downloading once again from quant mode using the get symbols function. The tickers we identified before as consisting of, these are our tickers, no? Apple, Google, Microsoft, Intel, Amazon, Netflix. Okay, I'm sure you have that class. So we're asking R to get the get symbols of the object tickers, and then we redefine the start date from 12/31/2016 because Meta and Netflix did not yet have stock prices from 2007 up to the end of 2021, and daily stock prices, and then auto.assign is equal to true. Okay, so when we run this, okay, so no need for you to run because you have already run this before. You will now have, okay, there. These are now your Amazon, Google, GSPC, etc. Okay. You now have this individual XTS object from the get symbols package. Now, what did we do last time? All right. So I made use of this make price frame. And I noticed, by the way, last time when I think when we were running it, there was some error in the QMAO package. So when I researched on it, I learned that we will have to install this financial instrument package and then library financial instrument package. So when I use this, there was no more problem with the QMAO make price frame package function. I mean, all right. So let me just share this with you in case you may put this before that, especially for those of you who were experiencing some problems with the code. If not, class, then that's okay. That's good. If you did not experience any. Okay. Okay. All right. So I'm creating this object PF price frame, and what will happen is that we are creating a data frame from the objects. We know that these are different objects: Apple, Google, Microsoft, etc. From 2016 to 2021, and our preference is the adjusted price because we know that these objects are OHLC and then adjusted, right? Volume and adjusted. We just want the adjusted prices, and a.omit is equal to true, silent is equal to true, and then let's view PF. So when I run this class, it now generates a data frame consisting of all the adjusted prices. So pretty good function, because you know that the Apple, Google, etc. They were coming from an XTS object consisting of 6 6 columns, but we were able to consolidate into one the different prices. Okay. All right. And we can also make use of the PF function. So either make price frame, or the PF function, the price frame function, that will give us the same result. Now, what's good about this also is that we can make use of the make return frame. Okay. So if you don't need really to generate an object consisting of the prices, you can go directly to getting the returns. Okay. Getting the returns, and then we just identify the date, the adjusted, and then the type, which is continuous. If you want the arithmetic returns, then you use the type is equal to discrete. Okay. So for this one, either you use the make return frame or the RF. Okay. You can make use of the RF function. This one, they'll give us the same output. Okay. So let me run this, and it now generates a data frame, okay, consisting of, these are now the returns, the log returns of our asset. Okay. And let's check class RF. Okay, so it's an XTS object, extensible time series. That's why you notice that the return frame that does not show the dates as a column. It shows the dates as an index there, which is very convenient, because there was a time when wala pang ganito, no? So yung date forms part of your column. Okay, and it makes working with time series quite unwieldy, quite difficult. Ngayon, yung date, ginawa na nilang part of the index. So instead of 1, 2, 3, 4, 5, ginawa na nilang date na lang yan. So mas maganda siya, mas madali siyang it's easier to work with that. Okay? All right, so I will not run anymore. Okay, let's remove the missing value there. So wala na yung NA sa first row, no? Okay. All of that are now, so complete na yung data natin, wala nang mga missing values. Okay. All right, let me pause for a while. Any questions, class? Any questions? Please tell me if I discussed itong yung return frame ba? Na-discuss ko ba last time? I'd like to be sure. Did I or didn't I, class? Hello? Did I or didn't I? Hindi ba? Okay, so you don't have this code chunk, class? Feedback, please, class. Hello? Okay. All right. So you have this code, no? You make price frame from the QMAO package. Wala. So which is which? My yes, my wala. Okay, anyway, I'll just give you this if you don't have this yet. Okay, I'm sharing with you the code for the make price frame. Okay, of course, my assumption here is that you have this, you were able to generate the prices data set with Apple, Google. Okay, if you check your environment, you should have the individual stocks. Okay. Otherwise, class, if you don't have the individual stocks, of course, you will not be able to run this. Remember, Apple is an XTS object consisting of open, high, low, close. Okay. volume and adjusted. All right. So, and then I said that another way to go about it is not to make use of the make price frame, but rather just the PF function. This one, PF function. Okay, and then if you want to get the returns, very easy, class. Very easy. You can make use of the RF function or the make return frame. So let me, in case you don't have this, let me share this with you. Okay, so the difference between the first code chunk that I gave is that the first code chunk will allow us to download and create an XTS object, an XTS data frame object that consists of the adjusted prices of the stocks that we identified here, yung ticker natin, ano? Okay, and then the next one will generate also an XS object consisting of the return. So it's either you use the make return frame or the RF function. Okay, so a while ago I ran this already. I'm not going to repeat the process. And then I removed the first row, because it consists of a missing value. Okay, so kindly chat please if you have already, if you're able to, if you're on the same page as mine, class. Na-generate nyo na ba yung RF? Okay, thank you. So how about the others? Importante, class, yung RF kasi yan ang siyempre pag nagpo-portfolio optimization tayo, what we're modeling is the returns and not the prices. Okay, good. Thank you. All right. So, please tell me if you have this, if they have this code. Itong mga codes na to. Itong portfolio returns na to. Do you have this? I think I shared this with you, di ba? Portfolio returns. We will just focus on the first two assets of your RF. No, wala. Sige. So let's now discuss portfolio returns. Okay. Okay. I'm not going to give all the codes at once. So yung iba isulat nyo, ah. Okay. So I'll just give you the notes and then you write the function. Follow along. Okay. Now what we have, the RF object class, it consists of the individual returns of your assets. Returns to Google, daily returns to Google, Amazon, etc. Now, if we're going to create a portfolio, okay, we will have what we call the portfolio returns. Portfolio returns, yun, hindi yung individual returns. From your other subjects, okay, from your other subjects, how do you determine, class? What's the formula for portfolio returns? Class? Anyone? Whether you have an asset, a portfolio of 2 assets, 3 assets, 5 assets, 10 assets, how do you compute for the portfolio returns? Well, the portfolio returns are sub P, let me just call it returns of the portfolio, is equal to the summation of your weight. Okay, weight of the individual asset multiplied by its return. Okay, so this is just very easy, very straightforward. This is how you compute for the return of your portfolio. Okay, so let's have an example. Where is that? Oops, sorry. Okay. All right. So portfolio returns. Let's have a basic example where our portfolio consists of just two assets, Apple and Google. So let's create this object, port1. Okay, kindly write that, just write that code. Port1 consisting of, from your RF object, all the rows and then just the first two columns. Okay, if you recall RF, this one, RF consists of your 3, 5, 9 stocks. So let's just subset this, create a subset of Apple and Google. Okay, so RF, and then subset the first two columns. And then let's just get the first 6 values and then view. All right, so this is the first 6 values, and then this is this is Apple and Google. Okay, so that's very easy. Now, in order to compute for the returns of a portfolio, we have to know the weights. Diba sabi ng formula natin, the return of the portfolio is equal to the weight of the asset, the sum of the weights of the asset multiplied by the returns of the assets. Okay, so that's let's assume first that we have a balanced portfolio 50-50, no? 50% si Apple at saka 50% si Google. All right, so this one I'll share with you. So mas medyo mahaba-haba to. Control C. All right, so this function, this code chunk, we're creating this object, port1. Port1 is our portfolio one, consisting of Apple and Google. And we're going to make use of the performance analytics package here. And then we're going to make use of this function, return that portfolio. Okay, so very convenient class. We can make use of the return that portfolio function in order to compute for the portfolio returns. Okay, take note, class, portfolio returns. So what's the syntax? We have to identify the object. The object is port1. Okay, take note of this, class. So these are the returns for daily returns, no? For Apple and Google. And then we know that Apple has 50% and Google has 50%. So in order to compute the portfolio daily returns, you just multiply this return by 50% and this return by 50%. That's about it, class. Very easy. And then once you have the portfolio returns, okay, that's for all the days that you're considering, then you can just average it out to get the portfolio returns for that specific period. Okay, so very elementary, just straightforward arithmetic computation. Okay, so performance analytics, then we're creating this port1 return. Okay, so let's run this 50-50. And then let's view this object, port1. And take note, class, there's only one. There's only one return here. Why only one? Because you're already using the return of the portfolio. So you can check that this one is actually just 50% of this one plus 50% of this one, or just get the average of this. Let's if I copy this, Control C, let me see, Control V, oops. Okay, the return for Apple on day one, Control C, Control V. Ayaw. Okay, let me do this. Okay, there. I got the first 6 observations. No. Sorry. Head, port 1 ret. Port 1. Okay, there. Let me copy this. Control C, Control V. 50% of this and 50% of this, so that's just getting the average, right? Average of this one, or adding this one times 50% plus this one times 50%. Okay, enter. Okay, what happened? Oh, sorry. I'm using Excel function. This is mean. Mean. Okay, 0.00112, just to check, class. Wait. What happened? 0.00112. Ah, mali. $2,042. What's wrong? It's not the same as this. 50-50. Can you tell me, class, what's my mistake here? It should be negative 7.685 times 10 to the negative 5. The average is just getting the 50% of this and 50% of the other one. Okay, if I do the long cut, 50% times plus 50%. Bucket. Were you able to get it, class? Bakit nag-error ako? Minus 50% times that return plus 50% times this return. Okay, anyway, class, I don't know why I'm getting an error term. 0.5. Baka yung symbol ko, no? Kasi nakaputi siya eh. Ayun, okay. Bakit kaya yung mean ayaw? Anyway, class, so 768544 yan. So I just got the 50% of the return of Apple and 50% of the return of Google on day one. So you now have Kasi yung port 1 natin is 1257 rows of observation. So ito class yung portfolio natin, 1257 din. 1257 rows of observations. Okay, any questions so far, class? Yung pag-compute ng ano ng portfolio returns, very straightforward lang naman siya, no? Kindly chat please if you're able to follow along. Okay. Thank you. Thank you. I still don't know why I'm not able to get the value here. No? Mean. Okay, anyway. All right. So portfolio returns yun. Okay, assuming it's 50-50. Now, this one, we're just, kasi portfolio return yung name ng column natin, we're just changing the name into port 50, 50-50 lang kasi, no? Either or class. And then, in order to get the average annual returns, kasi ito class daily returns to, no? This one, these are daily returns. These are daily returns. To get the annual return, then you have to multiply it by 252. So you get the average of your object, port 1 ret, and then times 252. Why is it times 252? Because there are approximately 252 trading days per year. Okay, so you have daily returns. You multiply that by, you get the average and then multiply that by 252. You get the annualized returns. Okay, so the average return for your portfolio is 32%. Okay, let me pause for a while. Are you able to follow, class? Okay, any questions? So, ano ko lang class let me just clarify. Ito, class daily returns to. Okay, oftentimes you're interested in the annualized returns for the specific period from 2017 to 2021. If you want to get the annualized return for this specific period, then you get the average of these daily returns and then multiply it by 252 to get the returns for the whole period. Okay? All right. So now the concept of rebalancing, let me just share this with you. Are you familiar? Did you discuss in your investment analysis before yung concept ng ng rebalancing? Kindly chat please. Yes or no? No, okay. How about the others? Na-meet nyo na ba yung concept ng rebalancing? Okay, thank you. Thank you for your feedback. Okay, now, what's the concept of rebalancing? Now, this is very important for us. Okay, suppose you set out to come up with a portfolio na 50-50. Now, you know that the portfolio, the values of your asset, Google and Apple will change over time. No? So, mag-change over time yun. So, ang mangyayari niyan, class, the weights of your portfolio, let's say si Apple naging tumataas yung value niya, no? Tumataas yung market value niya, yung returns siya masyado mataas. So what will happen is that Apple might have a tendency to increase in value over Google. So when you set out to do 50-50 and you want it to remain that way, across time, over time, hindi na magiging 50-50 yon. And for whatever reason, for example, you want really to maintain a 50-50 because you want to mitigate against risk, ayaw mo na yung isang asset mo nagiging masyadong mataas na, kunyari naging 70-30 na, and your risk averse, ayaw mo na masyadong loaded yung portfolio mo dun sa sa mas risky na asset. So that's where rebalancing comes into play. Okay, there's a very easy discussion of this dito sa Investopedia. So if you just open that, let me just show that. Very basic discussion ng rebalancing. No? Okay, here are the broad concepts. Rebalancing a portfolio is the process of changing the weightings of the asset in an investment portfolio. So it's very important that you look at the weights of the portfolio kasi across time, over time, it changes, di ba? It changes. The market value of your asset changes over time. And since the market value changes, then most likely the weights of your portfolio, of your assets change. So there's a concept of rebalancing. Okay, to rebalance a portfolio on an individual, so this will involve buying or selling of assets. So for example, your Apple has been increasing over time, so yung weight niya tumaas, and you don't want that weight to really be very very high compared to your Amazon. So ang gagawin mo, magbebenta ka ng Apple. Okay, you're going to sell Apple stocks, okay? Or perhaps what you sell in your Apple, you buy for Amazon. So that's what you mean by rebalancing, okay? Where an individual buys or sells assets to reach their desired portfolio composition. So kung gusto mo, ano lang yung within a range of, let's say, 40 to 60, 60 to 40, not one asset being more than 60%, and not one asset being less than 40%, then you will have to do rebalancing. So yung rebalancing, it depends. No? It depends on your risk appetite. It's not something that you do daily or weekly kasi it's expensive, di ba? Pag nagba-buy and sell ka ng asset, may mga costs yun. Okay, and also there are taxes involved. So you don't usually do that. For others, they do it annually. For others, semi-annually. For others, monthly. Yung monthly, medyo maano na nga yun. Medyo frequent na yun. So it really depends on your objective for your portfolio. Okay, let's just continue to read here. As the values of the asset change, inevitably the original asset mix will change. This is what I was telling you, no? Due to the different returns of the asset classes. Why does the mix change? Kasi the mix class is based on the market value. Okay? So you compute for the market value of your asset. Okay? You compute for the value of your asset based on market value, and then get its percentage, multiply it by and then get the average, get the weights, no, of the total. Then you will have a different weighing. When rebalancing an investment portfolio, it's important to be aware of the taxes, as I said, no? Kasi pag nagtra-transact ka ng buying and selling sa stocks, may taxes yun. Okay, I leave you guys to explore this further. Ito example, no? You set out initially 100,000 yung portfolio value, yung portfolio asset mo, and then 40% of which is sa stocks. Tapos yung 10% nasa less risky asset. Okay, ilan siya? Ito 10% treasury lang, and then yung 50% sa bond. And we know oftentimes that yung mga stocks natin, they will have a higher returns, no? Kasi mas risky nga sila, no? So at the end of the period, ang closing balance mo 112,900 na. And when you computed for your weights, mas malaki na yung sa stocks mo 49%, 9% yung sa treasury fund, and then sa equity mo naging 42% na. So this in a sense is more risky kasi mas mataas na yung sa stocks mo. So it's up to you really to determine, okay, kung how do you rebalance it, no? So that's called rebalancing. Okay, so the consequence of imbalancing, a popular belief among many investors, is that if an investment has performed well over the last year, it should perform well over the next year. Well, that's not true. Nothing can be further from the truth. Past performance is not always an indication of future performance. Okay, so makikita yun sa mga mutual funds. All right. So I leave that to you, class, and this one is a very good study, no? Pinapakita lang ito kung hindi ka magre-balance, ano mangyayari. Okay, it's a simple example, but I think you can easily follow along. Okay, so let me go now to, let's continue our discussion. So clear ka yung concept ng rebalancing. Pa-chat naman please ng yes or no. Okay, how about the others? Okay, the determination of how many percent to sell from your asset that has grown over time, that's very easy. Arithmetic lang siya lang, class. Kasi ano lang naman yun eh. Weights lang naman yung tinitinan mo, and then if you want to maintain a particular balance, a particular weight for your asset, you can just compute, no? Kung ano yung value ng asset mo ang ibebenta mo, ano sa mo ilalagay yung iba, okay? Etc. Okay, as I said here, rebalancing is the process of buying and selling portions of your portfolio in order to set the weight of each asset class back to its original state. Okay. Now in R, we can do that. No? We can rebalance. So let me share this code with you. Okay, sige, anuhin ko na yung ano. Ano ko na hanggang dito sa okay. So I already shared with you up to 370 here. So balikan natin to, no? Okay, bawasan nga po natin to. Masyadong mataas yung risk-free rate. Siguro mga gawin lang natin mga 3%. Masyado kong tinaasan 3%. Mamaya dito, no? Dito. Mamaya na lang. So this should be 0.03. 3%. Okay. Okay. So where are we now? Doon tayo sa rebalancing. So we can make use of the performance analytics function, the package. Diba sabi ko sa inyo, itong performance analytics, maraming ano to, no? Maraming functionalities. Okay, so take a look at this. Right, ito. So we're creating now another portfolio, Port 1 RET Rebal. Rebalance na to, no? Kanina kasi Port 1 lang, no? Port 1 RET. So by way of review class, ito 'yun, ano? Yung individual, yung daily returns ng portfolio natin. Now we would want ask R to do a rebalancing. Okay, so we're going to use the performance analytics. So the function is return that portfolio. Return ng port 1, this is our original object, yung Google at saka Apple. Okay, and then we define again the weights 0.5, 0.5. And then here we identify class. Kailan i-rebalance? Rebalance on pwedeng weeks, pwedeng months, pwedeng years, no? So let's just rebalance on a monthly basis. Okay? So what will happen now is that magre-rebalance si R. Okay? Tapos, because of the rebalancing, may iba ngayon yung mga returns. Okay, automatically magre-rebalance siya. So we won't get there today, but next meeting, ano na tayo, machine learning, ano, dun sa i-add ko na ano, papakita ko kung paano nabago yung mga weights, no? And paano na revert back to the original portfolio weight. Okay? So let's run this. Okay, now you have port 1. I-view natin to. All right. So notice class, ito. Okay. The first month, pare-pareho lang to dito sa port 1 RET. Okay, if you compare yung port 1 RET return at saka port 1 return rebalance, for the first month, exactly the same yung return. Kasi first month, wala pa naman tayong rebalancing eh. But if you take note, if you look at, okay, magsimula tayo sa February 1. No? Ito. Yung March 31, negative 4.58 times 10 to the negative 3. Ito yung rebalance. Yung sa port 1 ret, okay, 131. Is it the same class? Can you tell me? The same ba yung yung January 31? Yung port ret at saka port ano? Yes? Yes or no, class? Is it the same? Hello? January 31, class. Do you have the same returns? Okay, yes, same, no? All right, but when you go to February 1, ito, 2.937754. Compare that to this one, February 1, 2.8909, etc. What happened, class? What happened? What happened? Hello? What happened? Yes, nag-change na siya, no? Nagbago na, no? Why did it change, class? Oh, definitely it changed because the weights changed. Kasi yung ano, class, yung return ng asset natin, okay, if you multiply it by 50/50, okay? Yung return ng asset natin, class, dun sa March 1 na, January 31, kaya iba na yung weights ng ano natin, ng assets natin kasi nag-change na yung ano nag-change yung market value ng mga assets natin. So pagdating ng February 1, kasi monthly yung sinabi natin rebalancing, nag-iba na siya, class, no? Hindi na siya pareho dun sa port 1 ret natin, which assumes that 50/50 pa rin yung ano, which assumes that we are not changing the weights, no? Pareho lang. You just assume that you're not going to change the weights, hindi mo i-revert back to 50/50. Okay. So here, gawa tayo ng ano, i-compare natin, class, yung port 1 at saka yung port 1 ret at saka port 1 return rebalance. Okay, I gave this to you, no? So I'm creating this object, all port 1 returns. Okay, C-bind natin, column bind natin si port 1 return at saka si port 1 return rebalance. All right? Okay. So nag-create tayo ngayon ng ano, ng all port return. Okay, let me print this. Ayan, no? Side by side na siya. Yung port 50. And as I said, yung first ano nito, first 30 days, pare-pareho lang, no? Kasi nag-rebalancing tayo ng monthly. But when you reach starting February 1, iba na siya, no? Iba na. Hanggang dulo na yan, class. They will now be different. Okay? Iba na yung returns natin. Kasi every month nagbabago na yung ano, nagbabago na yung weights, no? Rini-rebalance na niya. Okay. So let's itong all portrait natin, ang pangalan port 50, tsaka baguhin natin to, no? Let's change this. Let's make the name non-rebalance at saka monthly rebalance. Okay. Yan. Ito yung non-rebalance, ito yung original natin. Ito yung monthly rebalance, no? Okay, then let's see, class. Let's create a table that annualized returns of your all port 1 ret. And then i-compute niya yung ano, yung Sharpe ratio. Okay, I'm sure you know Sharpe ratio already. And the Sharpe ratio is let's assume that it's 3%, no? And i-annualize niya, divide by 252. Sorry, igagawin niyang daily kasi 3% is annualized. All right? So let me run this. Okay. What do you see here, class? What do you see here? So you notice, class, yung non-rebalance natin, ang average annualized return niya is 32.87%. So yung monthly rebalance natin, mas mataas yung returns niya, no? 33.20. It doesn't happen this way always, no? So I have encountered some portfolios na rebalance na mas mababa yung returns. But in this case, mas mataas yung rebalance. And it's less risky, no? Ito 26.77, ito 26.23. So you can see the effect of your rebalance, no? Mas mataas yung returns niya, and yet mas mababa yung risk niya. Diba? So you can see the effect of rebalancing. And then the annualized Sharpe ratio, the higher of course, the better kasi the Sharpe ratio is the measure of returns per unit risk. So mas mataas yung ano nito, you're generating a higher returns per a unit amount of risk. No, mas mataas. So si monthly rebalance gives us a better performance. Okay. So I think I also gave this to you. Itong we can now create a charts performance summary of all port 1. So if you run this, it will generate this. Makikita natin yung difference ng rebalance at saka ng yung regular. Okay, yung red class yung rebalance. Although hindi siya masyadong apparent, no? But here you can see that in many portions the red plot outperforms yung non-rebalance, no? Mas mataas siya. Okay, and then also this one, drawdown. Ano yung drawdown class? Paki-chat nga please if you met this concept before, class. Did you discuss drawdown in your subjects sa Fin? Chat please. Ano ibig sabihin ng drawdown? No? Okay. Sige. At least kung hindi nyo siya na-discuss sa ibang subjects nyo, at least dito na-discuss natin. I don't think I shared this with you, no? Okay, isi-share ko sa inyo to, no? Ito. Control C. Chat natin. Medyo ano na tayo sa, oops, masyado mahaba. Okay. Let me here. Okay. Up to 385. Oh, tulong pa rin. Na lang. I hope okay na siya. Haba pa rin. Ito na lang. Hanggang dito muna si rebalancing. Control C. Ano ba yan? Ito na muna. Pag umangal pa si R. Nako. Ayan muna ha. So, yung note ko dyan, tapos itong here's how it works. Hanggang 380. Yan. Okay. And then 382. Okay. Then ito yung steps. Okay, so let's discuss this first. Yung drawdowns, no? Yung concept ng drawdowns. Kasi yung plot natin, okay, if you notice, automatically CR nagpakita ng ano ng drawdowns here. This one. So what are these drawdowns? If you notice also, all the drawdowns are negative. Yan. Walang drawdown na positive. And you notice, class, itong nasa taas, this is cumulative returns to. So you keep on adding returns per day. No? Okay, so if you keep on adding the returns, so sometimes bababa yan, no? Sometimes ito, pababa to, di ba? Pababa yung returns dito. You notice the drawdowns are also going down. Okay? And then, up siya dito. Okay? And then it does not fall above zero. Okay? Drawdowns, lahat yan negative. All right. So what's a drawdown? Okay, briefly, class. It happens pag nagre-rebalance ka, no? What's a stock drawdown? Sa rebalancing, it's a process of reducing or selling a portion of your stock holdings. All right? Yung sinasabi natin kanina, di ba? Pag nagre-rebalance ka, the intention is to as much as possible bring back the weights of your portfolio to its to the original intent, no? So pag ginagawa yan, class, anong nangyayari? Pag nagdo-drawdown tayo, nagbebenta tayo, no? Process of reducing or selling a portion of your stock holdings within an investment portfolio to bring it back in line with your target asset allocation. Okay? And it's, of course, as we said a while ago, yung rebalancing, ano yan, risk management strategy yan. Okay? So that na-maintain natin yung desired level ng risk appetite natin. Okay, so here, I'm not going to discuss it anymore, class, yung concept ng drawdown. Ano nyo lang, read through it. I'm sure madali naman maintindihan. Okay, now, what we have done so far is we have computed for the returns of your portfolio. Ba? 2-asset portfolio lang tayo. Sa case nyo, hindi lang 2-asset portfolio yan. So you'll be required to use 8 to 10 stocks. Pareho lang naman, class, yung code. Nadagdagan lang naman yung assets natin. No? Okay. So in general, when you do portfolio optimization, kasi class sa portfolio optimization, what we want is to determine what will be the optimal weights of our portfolio based on our objective. So the objective can be risk minimization or profit maximization, returns maximization. So it's either we're minimizing risk or we are maximizing returns. Okay, so portfolio analytics will be the main go-to package, no? Ito. Okay. So sabi ko nga dito, class, ang portfolio optimization, either you're minimizing the risk, which is depicted by the variance and minimum variance and mean variance optimization, or maximizing your returns, no? Okay, so gagamit tayo ng portfolio analytics sa package. And here's the summary of the steps. Number 1, of course, kailangan ando dun yung returns natin. Number 2, create a portfolio specification. Number 3, we have to add the constraints. Number 4, number 3, the objective. Number 4, optimize natin yung portfolio. Number 5, kunin natin kung ano yung mga weights. And number 6, charts and tables. Okay, so these are the steps done or conducted when we do portfolio optimization. All right, matanong nga kayo, class, in what subject in your fin did you generate portfolio optimization? Nag-portfolio optimization kayo? Meron ba kayong subject, class? May subject kayong Portman, di ba? Portfolio management. Ano yung diniscuss nyo doon? Nag-ano ba kayo? Nag-generate kayo ng ano? Portfolio which either minimizes risk or maximizes returns? Feedback, please. I just want to know. Okay. Answer, please, from the rest. I'm only getting one answer. About the others, class? Wala ba? Si Rhea, no? Sa FinMode. Pero si Rhea, sabi niya, yeah, we did. Pero sa FinMode, Excel lang tayo, no? Okay, here, di pa na-take yung portfolio management. Okay, sa iba, wala. Okay, anyway, sige. So, R provides a very powerful tool in creating portfolios. Pag sinabi mong create portfolios, determine the weights of the assets. Kasi di ba ang portfolio, let's say 5 assets ka. Ano yung weights ng assets na dapat i-invest mo so that either the returns are maximized or the risk is minimized. So ganun lang naman yung objectives natin. Okay. So ano nga class? Paki-install nitong na ano na naman, pero isama niyo rin for each, no? Kasi pag ini-install niyo si Portfolio Analytics, nagre-require siya nakasama dapat yung yung for each package. Okay, and once you're done, kindly run this and please chat kung okay na. Quickly cash, paki-chat so that at least makailang steps tayo sa portfolio optimization natin. Okay. All right. So ang first step natin, kailangan ma-define natin yung object natin. We're going to use yung object natin ng port 1. Di ba si port 1, ito, ba? It consists of the returns of Apple and Google. Okay, so we're going to use this. We're going to optimize a portfolio based on port 1. Okay. Sige. Ay, mahaba to. Ayaw ni R na mahaba. Isip kong umabot dito. Pwede. Okay. Alright? So step 1 natin class, identify natin yung object natin. And our object is, it's a portfolio of returns. No? Si port 1 class, Apple and Google yan, panay returns. Dapat na-generate na natin yan. No? And then step 1, define natin yung spec. Ito, portfolio.spec. We're going to make use of this function. Portfolio.spec, this comes from your portfolio analytics. Alright, so simple lang siya, class, no? Port_spec1, I'm creating this object called portfolio specification. I'm going to use this function, portspec, and identify natin yung assets natin. Yung assets natin is the assets coming from port 1. Ito yung port 1 natin, di ba? Apple and Google. We're using the name Apple and Google. So yan lang siya, no? Ganun lang kasimple. Specify lang muna natin kung ano yung assets na gagamitin natin. Assets is equal to yung column names ng port 1, which is Apple and Google. Alright, run natin to, class. Run. Okay, then let's see ano yung laman ng port spec na to. Okay, port spec. Okay, take a look at this, class. Portfolio analytics, portfolio specification. So it's a call, ang formula natin, portfolio spec, and then ilang assets siya? Dalawa, no? 2 assets, Apple and Google. And kasi yun yung port natin eh. So if you have a portfolio of 10 assets, then dapat i-identify niya yung 10 yan. And let's take a look at what this object is. So this is a list, no? List siya. Okay? List siya. Ano yung laman niya? Assets natin. Okay? 0.5, 0.5. Okay, saan nanggaling yung 0.5, 0.5 na yan? Where did that come from, class? Di ba dito define natin si port 1, di ba? Here. Okay, although port 1 is this one. Okay? Tapos nag-default siya na ang port 1 natin, okay, nag-default siya na 0.5, 0.5. Sa port 1, hindi pa natin define, di ba, na 50-50. We defined it only in port 1 ret. Okay, but it defaulted here. Okay, so ang laman niya, category labels, etc., etc. Constraints, wala pang laman. Objectives, wala pang laman. In Excel class, if you're doing portfolio optimization, kailangan i-identify mo yung constraints, tapos i-identify mo objectives. Kasi ganun yung linear optimization sa Excel. Okay. So now, nasa na tayo? Ito tayo sa 400. Okay, so nag-create na tayo ng object, no? Yung portspec1. Okay. Now, ang next step natin, magdadagdag tayo ng mga constraints, yung limitations ng model natin. So here we have 4 popular constraints. Okay, number 1, full investments. Pag full investment class, dapat yung weights strictly equal to 100%. And this is quite restrictive kasi minsan, pag 100%, theoretically dapat talaga 100%, di ba? 50% yung Apple, 50% yung Google, 70-30, 30-70, etc. But sometimes this constraint is quite restrictive kaya minsan hindi nakakahanap ng solution. No? Okay, so another one is ito, weight sum. Yung weight sum, it allows minimum, pwedeng yung sum ng weights is 99%, tapos yung sum ng weights pwedeng 1.01%. So pwedeng plus minus 1%. Okay, so this relaxes itong constraint na to na full investment. Okay, so we have weight sum and then box also. Yung box class, ina-allow niya na yung mga individual assets natin may minimum at saka maximum. Kunyari, gusto mo na si Apple, minimum niya 0%, maximum 70%. Sa box natin ilalagay yon. Si Google, gusto mo 40% minimum, 70% maximum, pwede ilagay sa box function yan. Okay? And lastly, yung long only, okay? Asset weights can only be positive. Yung mga weights hindi pwede maging negative. So dapat positive lang siya. So these are 4 common constraints. No? Pag sinabing constraints, limitations yan. Alright, so take a look here. I think I gave this to you, diba? Binigay ko sa inyo itong 442, class. Paki-chat please. It's almost time. Not yet. Okay, hanggang saan ang binigay ko, class? Until where? Step 2, wala pa. Okay, sige. Thank you. So, sige. I'll add this one. Step 2. Sana hindi Control C. Okay, normally class, I don't do this kasi I want you to be writing. Ayaw. Masyado mahaba daw. I want you to be writing the code yourself but medyo na tayo eh. Medyo press for time na. So, step 2, Control C. Alright. Notes lang yan ng step 2. And then here, okay, yung code i-share ko sa inyo. Sama ko yung step 3A. Control C. Yan. Okay, it's almost time class. Mga 1 minute na lang yata ako. So, I'll just, if you need to go class, siguro mag-extend lang ako if you don't mind mga 2 or 3 minutes. No? Alright. So the second step, class, sabi natin, yung una, nag-create tayo ng object na portspec. Pangalawa, i-add na natin yung constraints. Okay, take a look at this. So, gagamitin natin yung unang object natin, portspec. No? And then, ang function, add that constraint. Yan. Okay? Simple lang. Add that constraint. And then, ano yung portfolio natin? Yung portfolio natin is the object that we created a while ago. Portspec1, comma, and then type, dito linagay ko weight sum. Pwede rin yung type is equal to full investment. No? Ano yung weight sum? Diba? Sabi natin, ang weight sum here, it can allow a minimum or and the maximum na hindi 100%. Kasi pag 100% minsan, masyado restrictive yun. So here, take note, type is equal to weight sum, minimum sum 99%, maximum sum 1.01%. 101%. So ibig sabihin, the weights can be pwedeng less than 1, 99% lang, pwedeng a little bit more than 1. That will relax your optimization process a bit. No? Tapos, another line, portspec1, notice class, pag nag-a-add tayo ng constraint, separately, no? Separate line, separate line. Here, add that constraint, portfolio is equal to spec1, and then type is equal to long only. Ano ibig sabihin nito? Long only means that the weight cannot be negative. So yung mga weights natin, dapat positive lang. Hindi pwedeng mag-short, no? Kasi pag short, pwedeng mag-negative eh. And then another one, portspec1, notice pare-parehong pangalan. No? Add that constraint, portfolio is equal to spec1, and then type is equal to box. The box function will allow us to put a minimum and a maximum to your assets. So dito, minimum daw, 0. Pwede mag-0 yung asset natin. Maximum, 70. Okay, of course, you can redefine this. Pwede nyo baguhin. No? So ibig sabihin nito, yung asset natin pwede mag-vary from 0% to 70%. Okay, let's run this. Run. Okay. And then, if I view, ano na to? Itong object na to. Ba? Kanina, ano yung object natin? Okay, our object a while ago is portspec1. Nung nag-portfolio specification pa lang tayo. No? Ngayon, portspec1, nag-add na tayo ng constraints. So, if you view this object, tingnan natin, okay, yan, may nadagdag na class, di ba? Yan, no? Kanina assets lang, 0.5, 0.5. Alright? And dito may constraints na. If I click this, constraints, yan, tatlo na siya. Ano na dagdag na constraint? Weight sum. Okay? If I click this, ano yung weight sum? Ayan. No? Pwedeng ang minimum sum, 99%. Pwedeng ang maximum sum, 101%. Alright? Ano yung pangalawa? Here. Okay? Box constraint class. Box constraint, asan na siya? Minimum, maximum. Dali, itong pangatlo, sandali ha. And the third one, ito pa rin box constraint, sorry. Ang box constraint natin, ito class, no? 0%, 70%. There you go. So tatlo yung constraint na dinagdag natin. So that will account for the different constraints that we have. All right. So, and last class before we call it a day, Control C. So at least hanggang step 4 na lang ako, no? Yun ang i-record ko. Thank you for your patience. All right. So let's go to step 3. All right. So step 3 class, ito. Step 3 naman, after adding the constraints, mag-add na tayo ng objective. Yung objective natin either ima-maximize mo yung risk, i-minimize mo yung risk, or ima-maximize mo yung returns. Alright? So, simple lang siya. No? Mag-add din tayo ng objective dito. Alright? So here, I'm going to create another object, portfolio mean variance. No? Of course, pwede ko pa rin gamitin si portspec1. Pero here, I decided to use another object here, portfolio minimum variance, kasi mamaya pwede tayo mag-create ng port max returns, no? So it's the same as portspec 1, and then mag-a-add ulit tayo ng objective. So from our port min var, which is this one, okay, take a look at this. Type is equal to risk. If you're minimizing risk, ang ita-type natin yung risk. If you're maximizing returns, ita-type mo return. Okay, name is equal to standard deviation, which is a measure of your risk. And let's view this. So ngayon, okay, tino-import min var natin. Andito yung tatlong constraints kanina. Yan. Andito yung objective natin. Okay, take a look at our objective. Yan. Objective natin is target. Ito, class, no? Objective natin, risk, and then the standard deviation. All right? Okay. So, ito na lang, naka-record naman to. You may go, class, ha? Ito na lang, i-record ko na lang to. Just to have an example of yung okay, yung last class, optimize portfolio. And there are several methods here. I want you to look at this, portfolio optimize, no? Let's see if this will fit. Kasi iba't ibang methods eh. I'll just share this with you. Control C. Control C. Sana magkasya. Ayaw. There are different ways to optimize your portfolio. So una muna yung hanggang ito. ROI. Control C. Control V. Ayaw pa rin. Yung B na lang. Masyadong sensitive to si R. Ayaw niya magpa-chat ng control. Class, you may go, you may go. Naka-record naman to. I just want to yan, do the last para mapakita ko lang sa inyo yung yung returns, yung answer, no? And then asa na yun? Up to 3, 4, 5, 6. So these are the other methods, controls. Maraming methods, class, no? I will just focus on one, yung random lang. So depende rin sa natin sa controls. Depende rin sa objective natin. Chat. Ayaw. Masyado siyang restrictive. Okay. Anyway, class, ito i-ano ko lang sa Canvas. What I wanted to share with you is this one. Ito. Okay. So, magka-create na tayo ng natin, ng portfolio. So, ang mangyayari nito, class, since random yung proseso na to, yan, optimize method is equal to random, magsiset that seed tayo para pare-pareho yung natin, pareho yung result, no? Set that seed. So, the same min var opt1, optimize that portfolio. Yung object natin, port1, ang portfolio natin, port min var 1, and then method is random. So, if I click this, yan, may answer na tayo ng portfolio natin, class. Time na talaga, no? So it will take some time yung pag-generate ng ano ng ito ng optimal portfolio. Okay, it's still running. And then lastly, class, wala pa rin. Run pa rin siya. Run pa rin siya. Okay. So, anyway, class, if ayan, nag-run na siya. And lastly, class, you can now get ito, no? You can now get the, the result. Ano yung weights niya? So this tells us that in order for you to have minimum risk, dapat 32% ng ano mo sa Google, Apple, and then 67% sa Google. And then if I run this, ano ba yung measures natin? There. Ang standard deviation is ito, no? 1.6%. Okay? And then new returns, i-compute natin next time. All right. So thank you so much, class. I'm sorry for extending. Yeah, I'll pause the recording now. Stop recording.